Well, good morning, everybody. And here we're going to continue our Canadian tax education series for this wonderful tax season. 2024 and up and coming changes for 2025. I've had a lot of requests on, Bitcoin, cryptocurrencies, those sorts of things. So here it is. This is from a tax perspective. All right. I am not here to advise anybody on, trading in cryptocurrencies and that. So a lot of the information is taken from the Revenue Canada website. Once again, it's got 24 slides. So I didn't want to do this one live because there's so much information. The links are provided in the presentation so that you can go and look at Canada Revenue Agency directly to see their position and up and coming changes. So we're going to cover this introduction to cryptocurrency from a tax perspective, Canadian tax regulations for cryptocurrency, what do they view it as, and tax reporting requirements and tax implications for different Bitcoin cryptocurrency activities, compliance, and future developments. Okay, so from a tax perspective, this is the interpretation to cryptocurrency by Revenue Canada on October 22nd, 2024. Crypto assets are digital assets that exist cryptographically on a secured ledger, okay? There's many different types of crypto assets. Bitcoin is one of them, Ethereum, Tether, and many more than that. I'm certainly just looking at it from the tax perspective and the information provided by Revenue Canada and guidance. Transactions related to crypto assets often have tax implications and they've got to be reported. Okay, so if you're a crypto asset user, you have to know if your transactions resulted in a gain or a loss. You have to understand, are you a full-time business trader or are you a hobby trader? Because the way the tax is affected is different. All right. If you're a part-time investor, your capital gain is viewed your income. 50% of what you earn is taxed. If you're considered a full-time trader or business, it's 100% taxed. Okay. It's important to note, everybody, that cryptocurrency is not a legal tender like cash. Okay. And Canada Revenue Agency treats it as a commodity at this point. Okay, and I put the link in there for you. It'll take you direct to the Revenue Canada agency. So business versus investment, Canadian tax regulations for crypto. What does it tell us? Okay, so Bitcoin or crypto assets. Revenue Canada classifies crypto as a commodity, differentiating it from currency, okay? And it has tax impacts. It's like shares, trading shares, a commodity. And the tax obligations, transactions involving crypto could trigger those tax obligations. It depends on the nature of each transaction. Okay, so depending on what category you're in, are you a business or full-time trader? You're going to be taxed 100%. Are you a hobby or part-time? It's capital gains tax year for 2024, 50%, although they said they are moving it up to 2/3, 66.67%. So typically, that's a hot potato right now. Our government is prorogued. These tax law changes have to be approved by Parliament. They have to receive what's called royal assent. So talk to your tax advisor to determine which category you're going to be in. Is it 50% or 66.67%? Taxable events for crypto transactions. Okay, selling crypto for cash is a taxable event. So I'm going to show you an example here on whether you're going to incur capital gains or regular tax from the profit. We're going to use the two, the hobby trader versus a full-time business. And trading between cryptocurrencies could be a taxable event. It triggers gains or losses, market changes. Okay. If you're going to use your cryptocurrency to purchase goods or service, it's a taxable event because you're liquidating it now and you've disposed of it, deemed disposition. Okay, so here's my two examples. If you're a hobby trader, John, he buys, say, Bitcoin for $10,000. He sells it later for 16,000. His capital gain is 6,000, of which he is taxed at 50%. It goes 3,000. If you're a full-time business trader, so John's business, again, it's still $10,000. He sells it for 16. His income is 6,000. He's taxed at 6,000. Now I'm going to show you the tax rates, and then I'll show you the tax calculation. So these are the federal tax rates for Canada. I haven't included the provincial, that's too much in depth right now. We're going to look at the federal tax rate and what it looks like. Okay, so crypto can be classified either as capital gains, or it's just business income. Okay, it's crucial that you understand the applicable tax rates. You need to understand whether you're a full-time business trader or part-time. And ways that Revenue Canada will look at that is they'll prorate your income. So all of a sudden, you're winding down your business because you're being quite successful in the crypto sector. Say 90% of your income is from crypto and 10% is from your old business, but you haven't changed your business yet. Well, you're going to be deemed a full-time trader. Okay, so you also have to be aware of your tax brackets, that will apply to your crypto profits. So this is what's up and coming for 2025, and here's 2024. So we're going to show an example of that in the next slide. Now, the other thing that just want to share with you as an individual, your federal basic exemptions. If you're not familiar with what that is, what it is federally, you do not pay tax on the first $14,156 in income that you earned. Minimum or maximum, you do not pay tax on $15,705. The way it works in Canada is tax credits go dollar for dollar against your taxes payable. Deductions, you get a deduction from taxes based like an expense based on what tax bracket you're in. So let's talk about the reporting requirements. So here we go. So, as per the slide above, John's taxable capital gain was 3,000. At the rate of 15%, he's going to pay 450. Well, it's easy if he's taxed at 100% business income, it's 100% taxable. He's going to pay 900. So this is why it's very important for you to differentiate. Are you a part-time hobby trader or is it a full-time business for you? And if in doubt, contact your tax specialist to advise you of that, okay? Don't play a risky game and say, oh no, I'm only an investor. Even if you have a business that's incurring significant losses, you're going to get audited, okay? And it's just, pay the government what you owe the government. And that's another discussion for another day. Okay, so these, just to let you know, these calculations are based on individuals, personal taxes only. I haven't addressed corporations here. I will do that after tax season. I'm going to get into corporations and T2 and corporate tax returns that you're going to have to file. But just for the purposes of this presentation, it's an individual trading. He's considered a business, a proprietor, and 100% taxable if he's or she is doing this full time. Okay. Okay. So the necessary documentation for tax filing, I cut this and pasted this right out of Revenue Canada. You have an onus to keep good records. If you do not keep good records, Revenue Canada will send it back to you and tell you to keep good records. All right. So how do you keep good records of cryptocurrency that are going to satisfy Revenue Canada? Especially at a pace, I think some transactions, they change every 13 seconds in my analysis of cryptocurrency. And so how do you keep up to date with all of that? And another thing I just want to bring to your attention right now is common reporting mistakes and how to avoid them. If you do not report your transactions, okay, greater than 10,000, FinTrack can track that. Financial Transactions and Report Analysis Center of Canada. Okay, that's how they can track it, all right? And we'll touch on that a little bit more closer to the end. So be compliant. Okay, there is a community out there, international community, and they're sharing information, and they are able to track you. All right. So some of the common, mistakes when you record, you're not classifying income properly, and it leads to inaccurate tax filings. Okay. So again, there's the $10,000 limit. Report all transactions. If you make mistakes, if they're honest mistakes, and you want to let Revenue Canada know, there's a voluntary disclosure program. And we'll again touch on that later in the presentation. Now, you do have software providers. I think examples that I'm most familiar with is CoinLedger, Coinly. I'm not supporting any software provider or service provider over another. These are just the two that I happen to be familiar with. Okay. Now, you pay a fee typically based on the amount of transactions. Um, these softwares they have tax experts from all around the world. And they have Canadian CPAs in CoinLedger and Coinly that do adjust the tax reports to meet Canadian standards. And if you go to those websites, you'll see that there. So, it's accredited. All right. Now, not every software can handle all of the crypto assets at the speed that they're coming out. And so you're going to find, even though you're using these software, there may be, you may have crypto assets that aren't accepted into the software yet. Hopefully you can export to a CSV, upload into Coinly or CoinLedger or to whatever software you're using. If you can't, track it separately in an Excel sheet when you get your tax report from Coinly and CoinLedger, which you can request on demand, and it comes almost immediately. Unless they're super busy, you have a large portfolio, it's going to take a little longer. And on that Excel summary, add your transactions, your gains and losses. Okay. So just a heads up, 2026, this is what CSP crypto asset providers such as CoinLedger and Coinly are telling us, that as well as others, they are required to report directly to CRA your information, including your name, address, and your date of birth. All right. So if you're using that software, they're obligated. A little bit of a pet peeve of mine, because now all of a sudden you're paying these guys a software. You would think your information is confidential, and they're giving it to Revenue Canada. So I just feel like the taxpayer is paying for Revenue Canada to do their taxes. Something you might want to write Revenue Canada about, PEI, your MP, your MLA. Doing taxes should not cost money. Okay. Yes, if this is providing reports outside of tax that are useful to you, it also provides you with your asset holdings at the end of there that you need as well to include in your tax filing for your cryptocurrencies. It may help you track your portfolio, but I've found that you can track it without using a software. So I believe the software is largely for tax purposes. Just something to think about, okay? Also, just to let you know, there is a joint global task force, as I mentioned earlier. J5 and the tax agencies work worldwide. They are able to analyze blockchains and anonymous wallets and match them with known investors. Just something to really think about. So tax implications for different crypto activities. Okay, so we talked about crypto income, business versus hobby in slides 6 through 10. So other reporting requirements include the value of your inventory or your assets, as your holdings of your commodities for Canadian tax purposes as at year end. All right. Revenue Canada typically gives you two options, and this is right off their website. You value at the lower of cost in market. So you have to know the cost when you acquired the holdings or the fair market value evaluation date. So you're allowed to do that. So when you run your year-end report out of your software, it'll say, okay, here's the fair market value, here's the historical cost. If the fair market value, if it took a deep dive, your crypto assets and your fair market value is 10,000 and your cost is 100,000, you can value it at 10,000, lower of cost and market. Or you value the entire inventory at fair market value at year end. Okay, so I think we're, depending on where you're at, if it's probably fair market value, we'll want to do it, or if you have losses to utilize. If it's not and the cost is lower, well, you'll have to use the cost. And ensure the software you're using is accurate. And if you find anomalies, report them immediately to the software provider. They usually have a large chat room and people are sharing information on what worked for them and what didn't work. It's moving so fast, it's just impossible to keep up. If you have, new launches every day, different crypto assets, I mean, you have to give the engineers time to include it. And they're finding ways to get better and better at this, okay? And you have to track those variances. The onus is upon you. If your year-end does not report, if your year-end report is not correct by the cutoff, make sure you reconcile as to why and have an explanation as to why. And make sure the correct amounts are showing for Canada Revenue Agency. It's really important you do this. So when we talk about mining crypto and associated taxes, yes, if you get income from mining, you have to report it for tax purposes, ensuring your compliance again with all tax regulations. Sorry, a bit of a typo there. Mining cost deductions. So yes, you can have deductions, but if it's considered an asset, okay, what's the life of it? And you can't deduct it 100%. You've got to take a look at CRA's capital cost allowance rates. That's the equivalent of depreciation in the accounting and finance world. It's the tax rates that Revenue Canada will allow you to write off your mining assets if it's a capital cost and not an operating expense, all right? So I just want to touch on non-residents because we have so many non-residents in Canada. And I do a lot of taxes for non-residents all over the world. And so even if you're a non-resident of Canada, you're living in Canada or you're resident, you're not a resident of Canada now, and you're using Cryptoasset mining equipment in Canada to mine assets, Canada Revenue may think, okay, well, you're carrying on a business in Canada, and you might be required to file a Canadian tax return. So you also may be considered to have a permanent establishment in Canada. And under a certain tax treaty, depending on the country that you're from, you may have to file 2 tax returns, one in your country, one in Canada, okay? So tax treaties are very important. Read them. They're meant to prevent double taxation. But what's happened in the world, and especially after 9/11, is where are you doing business? Is it a permanent establishment? Or are you just going through? And I know a lot of software hosting providers. Canada had a lot of their databases hosted from the US and their tax databases, and those had to be moved to Canada and the redundancies, or you may have been subject to taxes or vice versa in Canada. The law is always changing, and Revenue Canada says it's up to the taxpayer when it comes to these crypto assets to be apprised of the tax laws, which again, I think is putting too much onus on the individual, especially when there's no tax guidelines in place or they're evolving constantly. And just so you're aware, Canada is following the US, and so we're waiting for big changes all the way around. For you non-residents, there's a guide 24058 that you can refer to. And I would recommend, if it's significant your portfolio, I would consult a Canadian tax expert. It's going to be worth it. Okay, so GST considerations again, based on the activity, you might be required to register for GST, HST. Here's the link to the Revenue Canada website. Go through the steps and advise, look to your tax specialist It depends again, is it exempt income? Is it not exempt income? And as the legislation is evolving, please consult a tax specialist on that if you're uncomfortable with the literature. Okay, so using crypto for goods and services. So if you're going to purchase goods and services with your crypto, it can result in taxable income, capital gains, affecting the overall cost of the transaction. It can also affect in losses, I guess, but typically we don't cash out until we know we're going to earn a profit, all right? Your adjusted cost base is crucial. Make sure your software is tracking those costs on the transactions, and if you're getting errors, you need to correct it. Now, what happens when you get airdrops and that sort of thing? If there's no cost base associated with them, it's probably going to be a zero. And if you did have, end up multiple transactions and incurring costs and revenues, just make sure you're tracking your cost base. Now, Bitcoin transaction, crypto asset transaction. I know Bitcoin and crypto assets are separate. So understanding how transactions work is essential for individuals, like, when you're using it to purchase. And there will be tax implications because all of a sudden you're liquidating it into Canadian cash to buy what you want, or if you can purchase with Bitcoin, again, it's deemed disposition. What is it when you take the revenue of the liquidation less the costs? Do you have a gain or do you have a loss? Do you have business income or do you have business loss? Okay. So information for crypto users and tax professionals. This is just, I didn't give you an example of trading one type of crypto for another. And this is right off the Revenue Canada website. And it goes through where Francis bought his first crypto with a value of 20,600. And he used 2.5 units of crypto B, which are trading at 8,220, okay, per unit on that day. So he originally bought those units, crypto B, for 15,000. So in effect, he's disposed of the 2.5 for 100 units of E with a value at 26. So assuming he's going to hold on to that currency B as long-term investments, his disposition on the July 2022 will result in a gain. And here's how we calculate it. So you've got the fair market value of E, the units he traded for B, less the 15,000 adjusted cost base on B. So you have a capital gain of 5,600. So that capital gain, I guess in this case, he is not considered a full-time trader. It's going to be taxed at 50%. So 2,800 of the gain is a taxable capital gain. All right. So, and we would multiply that according to the tax tables at 15%. On the other hand, if the original purchase price of the units had been 25,000, that's more than the fair market value, and he would have a capital loss. So just to give you both sides, and that would be calculated as follows. So the fair market value of the 2.56 units of cryptocurrency on the 22nd, less the cost base of 25,000 of the 2.16, it's going to result in a loss. So that capital loss, 50% is 2,200 allowable capital loss. Now, you don't get a refund from a capital loss unless you can apply it to a taxable capital gain, okay? And assuming you could, the recovery on that would be the 2,200 times 15%. Revenue Canada, the website's really good. I would go with their examples. If there's ever exceptions, pick up the phone and call them. They do have a toll-free number there, and ask for a crypto specialist, okay? A junior agent will not be able to help you. So compliance and future developments, and I think this is even one of the most important parts of this presentation. Okay, ensuring compliance with the tax laws. Okay, you have to review your crypto transactions to ensure accurate tax reporting and compliance. The onus is upon you. You won't get any slack with Revenue Canada, okay? You have to make sure that when you're trading, you've got the accurate costs, proceeds, and it's moving fast. So seek professional advice if you are not sure how you can navigate this. And they will help you, they'll make a referral probably to a software, or they'll help you build a system that you'd have to. I think it's cheaper to buy the softwares out there and ask them to keep updating, based on a transaction fee. It's relatively not that expensive. Okay, stay updated on the regulations. I mean, people have gone to jail on this, okay, in the United States, and just stay up to date on the regulations. You are required to know the tax laws, for maintaining compliance. The onus is upon you, not on the government. And if you don't keep accurate records in that, and the government comes along and assesses you and says, that's it, you haven't had, and that might hurt a lot more than if you do the work up front. So always review the transactions, test the software, make sure it's working. That's what I have done for my clients. I run it, I test it, and we have found out that, yeah, it doesn't always it's not always accurate. All right, I just want to jump right into here. Combating tax evasion. Okay, the Canada Revenue Agency has taken a very strong stance on this. They're actively pursuing businesses and individuals that engage in non-compliance or fraud in Canada and abroad. All right, they're not going to let it go. It's the way of the world. I think 40% of the world's countries are using some form of digital currency now, crypto assets. All right, so significant penalties, heavy fines and penalties, heavy interest on unpaid taxes, and it compounds with the way our interest finances work with the government in Canada. Okay, and that creates a huge financial burden. So you have to understand the risks associated with the tax compliance. You don't want to avoid penalties. You want to make sure you're filing right. Now, if you have good records and you can show, yeah, look, I tracked this happened, great. If you don't, Revenue Canada, if they come to a situation where it's gray, that middle line, and you don't have good records, well, they're going to just automatically slap something on you. If you have proven that you've got good records and you accidentally missed something, that is a different story. They'll give you the benefit of the doubt for the most part, and you can appeal interest and penalties. So, as everyone's aware, regulatory frameworks are moving massively. And with the new Trump administration in Canada, I'm mentioning the Trump administration because Canada is following the IRS and what they're doing for tax purposes. He has requested that a framework be developed. Okay, so hopefully that puts, the fire to everyone's feet in Canada, gets involved, and we get something not so vague. We get some solid tax frameworks. Okay, monitoring potential changes in cryptocurrency. Once again, it's crucial in how they're treated financially. Case law, what's happening around the world, because it is new and it is a global digital currency. Again, it's not a legal tender. Increased scrutiny on decentralized finance. Well, Defi, basically cryptocurrency is a decentralized digital asset system. And I'm sorry if the words I'm using are not perfect. I'm looking at it from a tax perspective, not from a trading perspective or a cryptocurrency specialist by any means. So, global coordination, once again, information sharing between tax authorities, they're figuring it out. And now these software companies that you set up your investments with, they're required to report it to Revenue Canada. Just like after 9/11, all the banks were required to report to the US. In Canada and the US, we had a bilateral agreement. All the US citizens, because the US is taxed on citizenship, not residency like most of the rest of the world, were required to report those assets. Okay. And, we'll get clarification of tax treatment on specific transactions. Ask a specialist. The specialists are the one, these software preparers are the ones that are sitting at the table with Canada Revenue Agency. You can pay consultation fees to them outside of the software costs. You can contact the specialist in your area. You can contact Revenue Canada. There's no point in requesting an advance ruling. It's going to take 18 months, and the framework is just not there yet in the skill set. It's not a black and white. So, the impact on investors, you want to know. You want to know daily, monthly. And I know you're monitoring your cryptocurrency, but you need financial statements too, because there's expenses that are not showing up in your trades and that you're incurring. Like you have a laptop, you might have transportation costs, you're going to conferences, you're going to training sessions, you're meeting with people, you have professional costs for your accountant, for your tax professional, for your software, all of that. So you want to keep track, you want to keep your financial information up to date to see, okay, am I really making money or am I losing money? Do I have high risk investments? Do I have stable coin? Have I converted it to cash? What am I doing? Okay. So I just wanted to share this with you. This is credit to CoinLaw. This was on their website, and they have some great information there. And this is just how different countries are treating crypto. So we're treating it as a commodity. The US is treating it as property. Okay. Japan, all crypto transactions are subject to income tax with up to 55% for high income earners. Wow, that's huge. Singapore exempts it from tax. South Korea is planning to impose a 20% capital gains tax, or crypto gains, it says, pardon me. Australia is requesting that crypto gains be designated capital gains, and they have a tax rate, based on the individual or the holder's overall income. China has banned cryptocurrency, and here's Canada at the bottom. So, just some interesting points, and might be a nice website to check out if you want to learn more about what's happening in the world. So in conclusion, okay, the importance of understanding taxes. Understand Canadian taxes on crypto assets is crucial so that you can remain compliant, no penalties, no fees for not filing on time. Okay, and remember, if you're using software, your software provider will be reporting this information to Canada Revenue. Anything that falls outside your software, export it into a nice CSV file, tally it up in an Excel sheet, monthly, weekly, daily, depending on how often you're trading, and add that to the tax report generated by your software and report that to Canada Revenue Agency. Okay, familiarize yourself with all the regulations. Read everything you can, okay? So that because Revenue Canada says you're responsible as the taxpayer to keep yourself up on the law and, the cases out there that are helping form this framework, okay? So the tax implications, crypto assets, again, just understand them. The transactions, it's vital for accurate reporting and compliance. Now, if that's too much work for you, again, as you go through those pages and pages, mining, Ethereum, tokens, NFTs, I do recommend the software. The software that I've seen is great. You're not starting from scratch. It saves a lot of time, and you'll be just dealing with anomalies, if they're just not, able to keep up with the fast pace of the assets that are being launched. So I hope you enjoyed this, and that ends it for cryptocurrency. Please, if you like this video, hit the like button, hit subscribe, share it, and please message me on any tax topics that you would like covered. I am doing them daily for personal taxes till April 30th and self-employed individuals to middle June 2025. And then I am going to get into corporations and taxes and how it works with a corporation as opposed to individual taxes. Thank you once again for watching, and I appreciate your patience with me as I learn to navigate YouTube.